come over here. It's going to go live just to introduce. And if you don't want to, you don't have to.
So for the whole thing, are you live now?
We did it just hit live, yeah. Hi, this is Nikki Carter Real Estate, broker for Sturdy.
Terry Harper with Mortgage Financial Services and the Harper Mortgage Group.
And over here, we didn't get up here, is Aaron, and he's with Cornerstone. You got to talk about that for us. And then in the back is Neil. And so what we're going to do is just kind of go through some ideas about the home buyer seminar and share with you some tips, some tricks, and answer any questions. So if you've got questions, tag this down below and we'll get to them. And Terry is going to start us.
Good evening, everybody. So I wanted to just go over a couple things regarding the mortgage process. I've been in lending about 20 years, but that aged me, and currently working for a mortgage company. So I'm going to be going over things specific to our company and just giving you some overall tips and tricks to help you with your home buying process. First thing I'd like to do is start with the actual process for you. So first things first, you definitely want to find a great lender you feel comfortable with and get a full pre-approval. Pre-approval process will be getting an application in. Typically they take about 5 to 10 minutes. I know we're all super busy. Most lenders now have the technology and option for you to go online and apply even from your phone. So we try to make it as easy and painless as possible for you. Once we get that application, we will then have a conversation, review information and data, run credit, and then we run something called automated underwriting, which is a very crucial part of your actual pre-approval process. That will tell us if we have an approved eligible, which will allow us to issue a pre-approval letter. So a couple of things on this actual step. If for some reason you don't get that approved eligible finding, which basically looks at the entire risk profile of your application and credit, then I or your lender should work with you and teach you on what you would need to do to become in pre-approval status. And so definitely not a situation where you can't work to get to that level. Once that pre-approval is solidified, then communication happens between your lender and your real estate agent and a letter is issued. Most people in this market will not show a property unless you are pre-approved. So you definitely want to take the moment to get that pre-approval and find out what your maximum qualification is, find out what your payment's going to be so you're comfortable, and also find out what cash to close is. So we're going to briefly touch on all these different items, but that gives you the process in a nutshell. To talk about the stream of communication from a lending perspective, you'll have a loan officer hopefully be your point of contact. You only want one, so if you have a lot, maybe reevaluate. Next is going to be a processor or a loan officer assistant. This person is very key once you're in contract. This individual is going to get all documents. They're going to get the loan packaged, order verifications, and their sole purpose is to get you in underwriting. So I like to bring this up because I definitely want to ask you to be super nice to this person. A part of our process is such that lots and lots of documentation is requested from the beginning to almost the end of the process. So I promise you we're not picking on you. This is our new normal. We definitely want to get those documents in as fast as possible. Next is the underwriter. Underwriter is going to review everything, make sure that loan meets guidelines. We are not in 2006 anymore when we get exceptions. Every loan, every institution has to follow the same, what we call guidelines. So just want to make you aware as you shop, you can't make a wrong move if you're with a lender you feel comfortable and that is competent. Next is going to be your closing team. So they're going to balance with title and they're going to look at figures from all sides of the transaction. They're going to look at the seller's side, they're going to look at the buyer's side, and they're going to look for any outstanding invoices. Next is going to be the funder, and then my favorite is keys. So that just gives you a really super brief overview of your flow once you have an accepted contract. Loan officer works with all individuals associated with your transaction. So we're going to be communicating with the real estate agent, we're going to communicate with the listing agent, we're going to communicate with their transaction coordinators, make sure they know when the appraisal's been done, make sure they know when you've got your clear to close, which is your final loan approval. So we definitely will be dealing and speaking with all people pertaining to the loan. Appraiser is basically a neutral third party. Definitely want to touch base on this. So we have a panel. We've invited every single appraiser within everybody that's a member of our board here in Springfield, which is our market. Basically, we send your order out, and then we have appraisers respond with fees and timelines, and we have to have those timelines meet your closing date. So that appraiser is a neutral third party that will appraise and substantiate the contractual price. If that appraisal comes in under, that gives your amazing real estate agent the ability to go and renegotiate potentially a lower sales price for you. So that full appraisal will be yours. You get a complete and full copy of that prior to closing, and it's got a lot of really great data in there, a lot of detailed information pertaining to your property and comparable homes within that area. So you as a buyer can feel confident that when you get into that house, you're not upside down, you've got adequate value, and you've also got all that really good information which you can share with your insurance agent, which you're going to meet with them in just a moment in this actual presentation. So do's and don'ts, I definitely have to go over the do's and don'ts as a lender. Get pre-approved before looking, right? That's our number one. Second, save for a down payment and or closing. There are programs and abilities for you to come in with zero down, and I will briefly touch on that and make you a mortgage aficionado here. And then closing, you do sometimes have the ability to have the real estate agent negotiate for the seller to pay your closing costs. I'm going to give you some brief instances on when that may be applicable and when you definitely should not ask for that. Hire an amazing real estate agent. Ask questions, look at reviews, make sure that you really feel that agent and you are clicking on all gears. Ask lots of questions. So I always say, I don't care if you have done eight mortgages or your first mortgage, the mortgage process changes so much in the last 20 years, I can't begin to tell you. There's no stupid question. So for my clients, I say, call or text me anytime. I want you to feel comfortable, especially going into the evening and weekends, and I don't want you to worry. So ask questions so we can definitely educate you and have you feel good about that question. After the application, do not have anybody run your credit. Please, please, please. Okay, that includes other lenders. At this point, you have selected your amazing rockstar lender. Do not shop for lenders. At this point, any inquiry that you have, whether it be from another lender, a credit, a new account, anything, we have to document. So we want to make that process as streamlined as possible for you and not affect your actual pre-approval that was issued by your lender. Deposit all cash on hand. We call this mattress money, right? The Anti-Money Laundering Act, all money pertaining to a mortgage transaction has got to be in an account for 2 months. Remember that number, 2 months. If you do not have that money, you can get a gift from a family member, and I can go into that in more detail later. Again, I know you're going to ask questions in the comment section, and we definitely can deep dive on some of these topics we're kind of giving you just a brief overview on. Do not get new debts even on deferral. I know right now everybody's, oh, buy this, and the first thing we want to do when we get in a contract is buy what? Appliances for our house, right? Go to Lowe's, go to Home Depot. You don't have to pay for a year. Please don't do that. Anything like that, I have to assess a minimum payment, and it could affect your actual approval. So just try to hold off on any purchases until you close on your loan. Don't change jobs or quit. This actually happens. Please do not change jobs. You can change a W-2 guaranteed 40-hour full-time position if it's more or same as what you're currently receiving. But stay away from being self-employed, getting into variable income, anything, commissions, bonuses, things like that. So just make sure that you have good communication with your lender prior to making any of these type of changes. Don't deposit larger individual deposits. So if you sell a car, if you sell something, just make sure that you speak to your lender. They'll tell you the level of documentation that they need so they can source and season that money. So definitely don't, put $10,000 in there because we wouldn't be able to use it if we can't show where it came from. Okay, I'm going to go into loan types now. So there are obviously lots and lots of loan types. I'm going to stick with the 3 core common ones that we see for our first-time home buyers. So first we have FHA. And I'm going to give you just a little brief overview and difference between them. FHA can be used in and around Springfield. So basically it's non-area exclusive. You can use it in rural areas, you can use it in densely populated areas. I really love this loan for first-time home buyers because it allows a higher debt to income. It is way more forgiving on derogatory credit. You have a 3.5% down payment minimum contribution that you can receive from a gift. So really it could be like a 0 down loan as well if you have an amazing family member that will gift you that money. And also when it comes to credit, the fee for not putting 20% down, it is a set percent. So if you have 800 credit or you've got 500 credit, it's the same, not that you would have 500, but it's going to be the same fee per month. So it's definitely just a forgiving loan, 30-year fixed rate. It's a great all-around loan. Now, the one thing with this loan that your realtor may advise, there are certain properties that would not qualify for this loan as far as condition. So if you have a home that's falling down and you've got foundation issues and you've got peeling paint everywhere and you have no electricity, it's not going to qualify for what we would call a government loan. This is a government loan. So definitely defer to your amazing real estate agent. They will absolutely tell you, or they'll reach out to someone like me to double check, and we'll let you know if that property will qualify. Next would be USDA. This is also one of my favorite programs. You know, coming from the West Coast, we did not have this program, but here in Missouri, we have it in many, many areas. And so this product is amazing. It's 100% finance loan. There's no additional fees for, you know, doing a silent second or anything. Nice low 30-year fixed rate. It's got a low fee that goes to USDA, which basically is in a pool for anybody that defaults on the loans. And again, the fee per month for not putting 20% down is a little bit lower than FHA. This loan is very area and income specific. So if you've got people making over 110,000, and we're going to go off of what you could make, right? So this would overtime, bonus, all the things I said we couldn't use. This one uses it against you. So it's definitely income restricted and it's area restricted. And just a quick update in our market specifically, we've gotten an update where USDA October 1st has basically shrunk our available areas based on population. So again, get with your agent. They can defer and tell you. We can also figure that out as well and quickly tell you if that property qualifies. This also has a lower debt to income. So just to make you aware, if your income is a little bit lower than what you think it should be, it's definitely a hard 42% debt to income ratio. So you want to make sure that if you've got higher debt to income, FHA is probably going to be a better fit. And last, if you've derogatory credit, this loan is not as forgiving. So it's definitely going to be USDA has to sign off on it and our underwriters have to sign off on it. So again, we run findings and let you know up front before you start looking if this is an option. Last but not least, conventional. Conventional first-time home buyer, you only have to put 3% down. Again, at 30-year fixed rate, awesome. This is going to be more property forgiving. So if you have that house with appealing paint, you know, and other issues that wouldn't go government, conventional is definitely a lot more forgiving for that. You also can use it anywhere, so it's non-area specific. The other thing with conventional is instead of having a set fee per month, you do have what we call private mortgage insurance. Private mortgage insurance is based on the overall credit risk profile of your loan. And so if you have 680 credit, I'm probably not going to want to put you in a conventional. That fee per month can be $280 a month. If you have 800 credit, you can be potentially around $70, $80 a month. This fee gets removed. So if rates go up to 15% and you want to stay in this loan, once you reach a certain equity position, you can elect to have it removed without having to refinance. So that is a nice option with this conventional loan. The last feature I want to give you on the conventional loan, which is pretty cool, not a lot of people talk about this, is called a recast. A recast is you're getting money from an inheritance. You're selling a truck. You're selling something that, let's just say for argument's sake, it's over $50,000. Pending you've made on-time payments, and I know you have, you can actually put that down on the loan and have it recast without refinancing. So that's a huge, amazing convertible feature with the conventional loan. So just want to make you aware of it. We do have a lot of people coming into certain amounts of money. It helps you free up things without having to make that decision right at the time you close. So that just gives you a really brief overview of the different loans. I do have examples and breakdowns of cash to close and whatnot, and I can definitely email that to you directly just with the same exact purchase price, taxes, and insurance. So you have a real true comparison between the different loan types. Tips for ensuring you have a good loan process. Be in good communication with your lender. On any timelines regarding current rent or housing situation, if you're having any delays pertaining to if you're selling your home to get into your new home, be sure that you really keep good communication with both your agent and your lender. Next, I know this sounds really dumb, but documents. We really need documents the moment that we request them, because if there's issues, it doesn't give us a lot of time to navigate that and help you and try to fix an issue. So we need those immediately and as fast as possible. The other thing regarding documents, we can't take any screenshots. And so when documents are asked for, this is a very common thing we run into. It has to be the actual document, or if it's from a bank, it has to be stamped and signed by the teller. So I know that those transaction summaries and those screenshots are great. We can't use them. So I just want to give you a little quick heads up on that. Time frame, 30 to 35 days from start to finish. If we have a borrower that's very compliant, gives us everything, we can close in 2.5 weeks, depending on the appraisal. So that just gives you a really brief, super crash course in lending. And I wanted to let you know that I have lots of resources that talks about MI, that talks about credit, ways you can access your credit if you're even contemplating getting into an application so you can look for free and just educate you, give you some good information. I also have links for a first-time home buyer education class you have to take for conventional, and it's free through a link that I have, so I'm happy to share that information with you. That actually has to have a certificate of completion, and that would be for a conventional first-time home buyer loan. So I just want to thank you so much for your time. And again, we are always available, all of us on the panel today, with any questions or additional information or just scenarios that we can help you with. So again, thank you for your time.
Thank you, Terry. I'm gonna grab this, I'll turn your speaker off, I'll turn this one on. So, did you get it? You don't need to hear double me. So, thank you, Terry. As always, she talks about talking with your amazing real estate agent, but I think she's pretty amazing myself, and I use her for a lot of our transactions. And I told somebody else this just a little while ago, and I'm going to go ahead and give her and her company a plug. So usually speaking, when you go under contract and we get your contract over to your lender, they lock you in at that rate. When they lock you in at that rate, if there is a reduction in rates, then the mortgage company or your bank, they pocket that profit difference. And that's fine, they're a business. It's just a way of doing business, and it's the common. However, the really super nice thing is that Terry can actually watch it daily, and she will drop and lock you into the lower rate as at 30 to 45 days. She said that she can do it 30 to 35 days. Sometimes we need 45. So when that happens, that's still there, but she can lock you into that lower rate as it drops down every day. So I'm going to put this and I can see some of the information. So what I'm going to do is talk to you guys a little bit about just the house hunt, what you're going to do, what you're going to be watching for. And those of you that are looking online, I'm going to give you guys a book, and I do have this digital. So it's just a home buyer's book. Just good information, talks a little bit about the market, how we're not in the market like we were in 2008, why we're not crashing, things like that. There's also a few places for you to put into it your goal setting, because I want you to know why you want to buy a house. I don't want you to buy a house because your brother bought a house. I want you to know really what you want to buy in a house. And then also what the absolute deal breakers are, and the things that you have to have, and the things that you will not put up with inside of the home. So those are just some good activities that I want you to do. I'm going to show you guys a couple of things here first, though, and I'm going to talk to you about this when I meet you one-on-one, but the state of Missouri, we have a Missouri broker disclosure form. I'm just going to kind of use this as a guideline, because I really want you to know what your rights are as a buyer. I want you to know the types of agents that are out there available to you. So you're going to have your seller's agent. That is the person whose sign is in the yard. They represent that seller 100%. So they have full fiduciary responsibility to that seller. I would be representing you. Well, and I can do buyers or sellers as well, but in this situation, I would be taking care of you as the buyer. So if I am taking you around to different houses and I'm unlocking doors for you, I am your buyer's agent. At that point, I take care of you 100% as the buyer. So any decisions that we make, any help that I give, it's your fiduciary responsibility to the buyer. Where it gets a little bit sticky is if you are doing a dual disclosed agent. Keyword there is disclosed. So if my sign is in the yard, do know right now and foremost that I'm also taking care of the seller, and I'm taking care of you. Well, I cannot give 100% of myself to two people. I don't know who can do that, right? You can only give 100% of yourself to only one individual. So with that, with the way that I hold the integrity is I don't do the negotiations. So at that point, hopefully I have taught you and trained you enough on what we would ask for. So you will tell me what you want to offer. I can share with you comps, so that way public information as far as how we come up with the pricing. But you're going to tell me what you want to offer, and I will write it up, cross all the T's, dot all the I's, make sure everything is compliant. However, I won't negotiate, because guess what? I know what you're pre-approved for. I know what the seller has to have and what their motivations are and what their plans are going forward. So I'm not going to tell you, oh, you could probably get them down a little bit. I'm not going to tell them, oh, you can probably get them up a little bit, because they're really qualified for $100,000 more than what your property is listed for. So that's how I do that. So I'll write it up, let them know what the offer is and why, and wait for them to give me a response. And I will write up the response and deliver that back to you. So that's really the only time that there is going to be a hard situation, and we'll cross that when we get to it. So the other thing is going to be a sub-agent. We really don't do sub-agency much in this area, but that's if I'm going to be, let's say you want to look at a house at Lake of the Ozarks and I don't have full access to their MLS. It's okay. I'm probably going to refer it out at that point anyway. But if not, I just have to have a broker up there that will let me work as a temporary, so to speak, to take care of you. But I'm probably just going to refer you. If you're trying to do something in St. Louis, that's going to be too far for me to go anyway and take care of you because I don't know the area like I do here. Designated agent, I am a designated agent as well. And what that means is I work for a brokerage. I am a broker, so I have my broker's license, but because of business purposes, I choose to hold it inside of another brokerage. Well, anytime we do lines of business, that broker really is the one that takes care of your contract. They're the ones that own that business. So everybody within Sturdy, if I'm not designated, would have access to your information. So we don't want that, because if we're showing another house that's Sturdy, we don't want them to see your information. So I work outside of the company to represent you, even though the business is owned by the company. So it's just a way to protect you so I can take care of you at 100% without anybody else in the company seeing your documentation. Transaction broker, that's a really easy one. You're buying grandma's house, or you've already talked to a friend and you've negotiated everything out and you just need someone to write paperwork and make sure everything is compliant and legal. I can do that for you as a transaction broker. So those are just some things, and we'll go over them individually. But what I'm going to do in our little book on number 4, so if you happen to be in our room today, you can look at it there, or I will also send you a PDF copy of this. So what to expect when we're purchasing a home. First, we're going to have your initial consultation. I'm going to go over the contract to hire me to take care of you, and I'm also going to go over with you the contract to purchase a house, so that way when we are in a rush, then you already know what it is in there and what to expect. So we're going to have that consultation. You're also going to get your mortgage pre-approval. As Terry mentioned, sellers are not going to take you seriously if we don't have that pre-approval. So why go out there, get our hopes up, find the perfect house, and then it happens to be a 24-hour period of time that we can't get a pre-approval and that house goes under contract. So we're going to do that ahead of time. We're going to set up instant home alerts. So I'm going to do that from my website. I'm also going to do that from our local MLS board. Typically, they're going to send you the same homes, but every once in a while, just the way that the algorithms are, it might send you something different. So I like to do it on both. From those, you're going to do shopping and I'm going to do shopping. I tell everybody this is teamwork. I might find the house, you might find the house. That has nothing to do with whether I'm a good agent or whether you're a good buyer. So I promise you, at every stoplight and on the toilet, I am not searching for your house just like you are. So I have other people that I'm working with, and so every stop, I'm not looking for a house for you, but I am going over and looking at everything every day, and then I have those automatic alerts set up. So if you find the house, just take a screenshot of it and let me know. You're not going to want to go to realtor.com and Zillow and hit contact agent. You're going to get back to myself, or if you're already working with an agent, get in touch with that direct agent, okay? They need to know what you're looking at and they can represent you the best that way. If you go on to some of those online sources, I'm not saying you can't search them. So by all means, search them. You might find some for sale by owners or something like that, but don't hit the contact agent. You're going to get with myself or the agent of your choice. Then we're going to show you some houses. We're going to open that door. We're going to show you around. Most agents, I think, are going to be like me. We're not going to do all the deep digging on each property that we look at. We're going to familiarize ourselves with it and have some information. But when it is the house and you absolutely fall in love with it, that's when we're going to do the deep digging for you. So if it is the house, at that point, then we're going to draft the offer. And I've already given you some information about what your contract is and what it means and how we can work in some of your closing costs to the seller's expense into the offer. So that way we can try to save you a little bit of money with that. After that, we're going to work on negotiation. So if we go under contract, our negotiation will stop at that point. So once both people sign the offer, then that's when it turns into a contract. So often we're going to go back and forth, meet somewhere in the middle where both people are happy. The other part of the negotiation is if it is in repairs, and that's where we're gonna bring Aaron into our little group here in just a minute, because we're gonna have you talk to an inspector. They're gonna go through your home, they're gonna make sure that that house is something that you wanna purchase. Now, when we're looking at that, they're not going, this is your honey-do list, this is not a renegotiation list. However, we're looking for major items. Sill plate's bad, termites, the roof has gone bad, the windows are leaking really bad. Maybe the HVAC isn't working right, so some of the bigger items. Plumbing is faulty underneath the house, things like that. So we're gonna have those things addressed, and that's another part of negotiation, and Aaron's gonna talk to you a little bit about some things that he looks for there. And then I manage all the details, so within your contract, there's deadlines for every single thing that we do. Deadlines for closing, deadlines for negotiations, deadlines for your inspection, deadlines for getting your financing, deadlines for the contingency on the inspections, as well as having your appraisal done. So it's a lot for you to keep up with, so we have systems in place to make sure that that is taken care of for you. So once we get all the way through the process, you get your keys, and that's the fun time. And usually I'm gonna take you guys even a little gift at that point. So after closing, I really do pride myself in making relationships with you. I want you to come to me, even during tax time. If you need a copy of your CD, which is your closing disclosure, get a hold of me. If you need a copy of your deed, get a hold of me. If your neighbor is wanting to sell their house, get a hold of me. So you get the idea. If there's anything that you need, if you need a handyman, you can still get a hold of me. So I'm always here for your help. So I'm not going to talk a whole lot longer because I want to have that one-on-one consultation with you. But I am bringing Aaron up here. I'm going to give him time to come around the corner, and I'll take my speaker off and give that over to him. He's going to be so happy. I'll put that on your lapel here. There you go.
All right.
All right, over to you.
All right, thanks everybody. I'm Aaron Driscoll with Cornerstone Property Inspections. Part of the home buying process is when you have the home inspected, and that's what we do for you. So we come out to the house and we will take a look at virtually everything. So we'll walk on the roof as long as it is safe to do so. Look at shingles and the venting and the structure and gutters and how it holds water, or that kind of thing. And then we'll go to the outside, look at the exterior doors and windows, and we run all the water, test all the electrical outlets and that kind of thing on the outside. We'll make sure that there's not any water infiltration around the house or that kind of thing. The whole time that we're there, we're looking for termites or water damage, that sort of thing. We get up in the attic as long as we can. Some of the really old houses, they have a really small attic access, and sometimes it's really hard to get into the attics or into the crawl spaces all the way to look at everything. But we do get into everywhere that we can. Look at the breaker panels, look at the heating, cooling systems, look at the plumbing, all the drains, all the structure. We're testing outlets and opening and closing doors and windows, and we're looking for stains and looking for cracks and settling issues, and again, still looking for termites the whole time, or any kind of moisture issues, mildew, or that kind of thing, staining. When we find those issues, what we do is we take pictures and we put that into a report form that we email out to you that day. And so you and your realtor will have that, and that falls into that negotiation process, that if we do find some termite damage or some rot, or the roof is bad, or HVAC, or whatever issue it is we find, we provide that to you so you guys can negotiate that back with the buyer, or the seller, sorry, and that way you can continue on the process, get that negotiated out for repairs, whether it's negotiated out where they will make the repairs, or you guys can do it later on, however that falls.
one thing that I really like about what you do is the re-inspect, because there's some things that I can check, like I can tell that the sink isn't leaking anymore, the toilet's not loose anymore, things like that. But if it's roof or electrical or in the crawl space, I don't typically like to go in the crawl space, I call you back.
Right, and so some things that we'll do, like, for example, if we find some issues in the house that are negotiated out, say it's some termite damage, or it's some water leaks, or structure, or roof, or whatever, we can do what's called a re-inspect. So we'll come back and we'll look at the house again, and we'll only look at those things that have been repaired. So we're not doing a whole other home inspection again. If the roof was replaced, we'll come back and look at the roof, or we'll come back and look at whatever issue that we have that you negotiated out and had repaired. Some of the things that we offer at Cornerstone, we do certainly the home inspection itself, water quality testing, septic inspections, air quality testing or mold testing, termite inspections.
You been right on yet?
And we do radon, yeah. We test for radon as well. So those are some things that you may want in the house. You know, when we do the inspections, you may choose to have those done. Not everybody has to have those, and not everybody wants those. But that is something that if you want it done, then we can do that for you. Again, some of those, like the radon tests or water quality, mold, air sampling, that kind of stuff, that will come in an additional days later on when we'll get the test results back. But we usually email those out right to you as soon as we get them. What else do we have? What other questions do we
I
have?
think that's about,
That's about it. That's all that. I appreciate your time, and if we can help you out, let us know. Thank you.
pass this off over here to Neil. And then do you want me to run your
Yes, it's
computer for you?
for me.
Before we get this here. I may just have to do it like that, because I don't want to hit another.
Is it the one up by the other three dots? Above those three dots? No, that's weird. What if you right click?
I got left with this, Terry.
Do you have it on another slide somewhere? Or another tab? I mean?
I can just do it without the computer, it's okay.
No worries.
Nothing crazy up there. All right.
All right. Hello, Facebook. So I'm Neil Breding. I'm the insurance agent in the group. I'm just going to talk real high-level stuff, nothing too crazy. Thank you, Aaron, by the way. Thank you, Terry. And thank you, Nikki. A lot of great information so far. So the insurance agent, I've obviously got the most exciting job of everybody. But I am kind of the last person that you get to. We try to do this in kind of a chronological order here. You're going to first talk with Terry. You're going to make sure that you're ready to buy a home. Once you know that you're financially ready, you can talk to Nikki. Find that home. Once you find the home, you want to make sure that it's in good shape. That's where Aaron comes in. Once you're under contract, everything's good to go. Obviously, you need to get insurance set up. But after you've already kind of gone through all of those things, it's going to be real easy just to be like, I don't even want to mess with that. Insurance is boring. It's a pain to even pay for. A lot of people would rather even not have it, which is a little crazy, but I understand it to a point. But it's really easy to just kind of say, whatever, let's just throw something together that's going to make the lender happy and move on. Shouldn't do that, is the short answer to that. So insuring your home is pretty huge, especially if you're a first-time buyer. This is probably the biggest asset you've ever owned. You definitely want to make sure that you're insuring that properly. It's not something you want to lose. It's not something you want to get 3/4 of what you need to rebuild if you need to. So that's actually the first thing I was going to talk about is your dwelling coverage. A lot of companies call that coverage A. Dwelling is kind of the most important thing you're going to see on your deck page or on your quote whenever you're looking at homeowners insurance. That is the maximum amount that your insurance company is going to pay out in the event of total loss. It doesn't mean if your house burns down, you're just going to get a check for whatever that coverage says. It just means they're going to cover you up to that amount. So if you've got a house that you just paid $350,000 for, most lenders are going to need that home to be covered for at least $350,000. But a lot of times that home has some unique construction. Maybe it was built 50, 60 years ago. There are some different things that if we rebuilt it the same way it is, it's actually going to cost more like $400,000. So it's real easy, again, to get a little complacent this far along into the buying process to just say, hey, 350 is good, my lender's good, let's move on. But you don't want to end up in that situation where you have that total loss. And that's what we're talking about here. If you have a claim that's substantial enough, it's going to make more sense just to clean up the mess and rebuild that house all together. You want to make sure you've got enough money to do that. And if you've got a $350,000 house insured for $350,000, that's great. But if you got a $400,000 house insured for $350,000, you can imagine why that could be a problem. So dwelling coverage is pretty important. I did put an asterisk on there that it is not always the maximum amount. A lot of companies, my own included, have coverages where you can get extended replacement costs. That just means if, I'm sure everybody remembers when lumber went up insanely just a couple of years ago during COVID. If it's going to cost randomly because of some one-off situation like that to rebuild your house, that's where that extra extended dwelling coverage can come in. Usually it's 10 to 20% more than what that dwelling coverage is, but that doesn't mean in a normal situation, oh, I've got my 20%, it's fine if my dwelling coverage is $80,000 short. That's not true. That 20% is just there for that kind of crazy inflation emergency. So the next thing I had on there is some other coverages, some other things you're going to see on that deck page or on that quote. The first one is going to be liability. That's if somebody gets hurt on your property. I don't know if any of you heard that story, but there was actually several years ago, somebody was breaking into a house in the middle of the night through a skylight, cut his leg on the way down real bad, ended up getting stitches, blood all over the kitchen. But he sued the homeowner and actually won. Now, I'm sure there's more to the story than that. I'm sure he didn't just clean up while he was robbing this house, but it is kind of true. Somebody can get onto your property easily and they can get hurt on your property easily. I'm sure you've all heard of swimming pools, trampolines, that sort of thing. That's what your liability coverage is for. If somebody gets hurt on your property and is coming after you to get their medical bills taken care of, that's where that comes in. You want that number to be an absolute minimum of $300,000, but you really want it to cover all of your assets. So if your assets are well above that, maybe go up to 500. If your assets are beyond 500,000, you want to get an umbrella policy, which is a conversation for another day. But the reason for that, if somebody comes after you and you don't have the cash, they're going to come after assets. You want to make sure all those assets are going to fit underneath that cap. So that's liability. Medical payments is more free or actually invited guests. If a friend of yours comes over, they slip on some ice, a mess that you didn't see, end up with a concussion or something like that, you probably don't want your friend to have to sue you to get their medical bills taken care of. That's where that medical payments comes in. Usually 1 to 5,000 is plenty, just kind of depending on how often you have people in and out of your house. The next one's personal property. So these next couple I'm going to talk about are usually percentages of your dwelling coverage. So say you got a $400,000 house, $400,000 replacement cost. Personal property is usually going to be 75% of that, so $300,000 in that scenario. Sounds like a lot of money, but you got to think if all of your stuff is gone, whether it's a fire, flood, whatever the case is, if everything's gone, you got to go out and buy it all brand new. You're probably thinking there's no way I could have a yard sale and make $300,000. Well, you probably couldn't. But if you had to go out and replace it all after you sold it, there's a good chance you're going to spend that much. The next one's, my company calls it auxiliary private structures. Other structures is what that's a lot of times called as well. That's just structures outside of the house itself. Sheds, shops, detached garages, fences actually count as that. Those are usually going to be about 10% of your dwelling coverage. So, you know, $400,000 house, you got 40 grand. We can always bump that if you've got a real substantial shop that's finished out, really cool man cave, something like that. Additional living expense, that's a really cool thing. And these are all in addition to your dwelling coverage. You got your dwelling coverage to rebuild your house. These are all additional amounts of money you're going to get in that homeowner's claim situation. The additional living expense is just for if you have a claim, whether it's a total loss or not, if there's a claim substantial enough that the house is just not livable, that's where that comes in. It's usually 20% of that dwelling coverage. So again, $400,000 house, you got about $80,000 to work with. to get yourself in a hotel, apartment, whatever the case is, while they're fixing your house. Moving on down, deductibles was the next part. Deductibles, as you know, whether it's auto insurance, home insurance, that's just the amount of money that you're responsible for. So say you have that big claim, you got a fire. Just a few doors down from me, somebody actually had a fire a few weeks ago. They finally broke into that house and got everything started on that claim. It did take a while. Not sure who the company is. I won't get into that, but that's obviously an unlivable house. They're using their additional living expense, but you got to think that was probably a $100,000 claim. That was a 6-figure claim. They're basically redoing the entire top of the house, redoing the whole roof structure, not just the shingles. They're rebuilding the roof of this house. You don't want to pay very much of that $100,000. A lot of times you end up in these percentage deductible situations where you're like, I don't even know what my deductible is. Rule of thumb, if you got a house that's under $250,000, I usually set them up with a $1,000 deductible. That means that $100,000 claim, you're just coming up with $1,000. The other $99,000 is taken care of by your insurance company. If you get into a higher value house, you have more cash on hand, and you're able to take on that bigger financial expense, I guess. Whenever that claim happens, you can save some money on your premium each year by doing a little bit higher deductible. But I always advise to stay away from those percentage deductibles. Those percentage deductibles can get a little frustrating. That just means they're going to do a percentage of your dwelling coverage. So again, $400,000 example, if you got a 1% deductible, you're looking at $4,000 for that deductible. You could do a 0.5%, keep it at $2,000. But even in regular inflation, not exactly like today, but even in regular inflation days, that number is going to go up. So if your dwelling coverage is $400,000 this year, even if things weren't as crazy as they are, it's probably going to be $408,000 next year. Now your deductible is just a little bit higher, and it just kind of keeps going up, and it's a little bit hard to keep track of. So don't recommend those, but make sure you know what your deductible is. That's the biggest thing. Moving on down as far as ways to save. Since we didn't get this going, I can't see my list here, but there's a handful of ways that you can save on homeowners insurance. The biggest thing is going to be bundling your auto insurance. I always tell people the biggest discount I can get you on home insurance is if you do your auto insurance with me, and vice versa. The biggest discount I can get you on your auto insurance is if you do your home insurance. It's nice to have it all in one place anyway. You're just calling one guy, regardless of what happens. You don't have to be like, oh, who's this with? I can't remember if it was him or him, her for this. It just becomes a mess. So having it all in one place is always a great thing. Next thing you can do to save on homeowners insurance is going to be, when you're looking for that house, try to find something with a newer roof. Talk a little bit about, when you find those repairs, when Aaron mentioned if there's something going on, you can negotiate maybe off the price if you're not willing to fix that, or if they are willing to fix it, you can negotiate getting it fixed instead of having to just deal with that or back out of the deal altogether. So that's a big one as well. But honestly, at the end of the day, the biggest way that you can save money, the biggest tip that I can give you as far as homeowners insurance is just making sure that you've got a good agent. Now, I've had a ton of situations where people say, oh, my agent's a great guy, great guy, great guy. Hear that all the time. And then I get them finally down the road to let me quote their stuff. And then I find out they've got state minimum liability limits on their auto insurance, or their home is underinsured by almost $100,000. And it's like, well, I'm sure he's a great guy, but he's not really taking care of your stuff. And so when I say get a good agent, I'm talking about finding somebody that's going to pay attention to little things like this. You want to find somebody that's personable, obviously, that's easy to talk to, easy to get a hold of. That's kind of insane. I opened my own agency about a year ago, and I learned pretty quickly that if I didn't answer my phone, I'm setting myself apart a little bit. So that's the biggest thing. Find an agent that's responsive. Find an agent that's going to pay attention. Make sure they're going to spend more than 5 minutes on the phone with you when you call them about, hey, I'm under contract on this house. Can I get a quote on it? That's not a 5-minute conversation. As I just went through with you, finding out that dwelling coverage that I talked about, determining that number is a 15-minute process at the fastest. And so if I'm on the phone with you, I'm going to ask you a few questions. Hopefully I can find a lot of information online. But there's a good chance I may not, and I'm going to have to ask some questions with you as well. So that's the biggest thing. Finding an agent that's going to be diligent enough to make sure that you're getting the right coverage at the best price, making sure you're getting every discount that you possibly qualify for. That's where you really have a good agent. So that's kind of the biggest thing. And then just a little bit about, I guess, speaking towards the agent. So I haven't really talked about myself much. My name is Neil, obviously. I've been in business it's going on 4 years now. But I actually opened up my own agency through Country Financial a little over a year ago. So I am my own. You're talking to me. You're not talking to me. That's not the way it works. With me, you're just getting me. I'm going to have staff here in the next few months, but it's just going to be support staff. I'm going to be the guy you call. Every client of mine is going to have my cell number because those house fires, those tornadoes always seem to happen at 2 in the morning. And so you're not having claims 9 to 5. That's not usually the way that it works. If you do, great. I'm a little easier to get hold of, I guess, that way. But you're going to have my cell if you're my client. Country Financial is who I opened my agency through, and Country Financial is relatively new to the Springfield area, so a lot of people around here haven't heard of us. We've only been here since 2019, but we're a very large company. We actually ended up in the mid 700s on the Forbes list here recently, just a couple months ago. So very, very significant company. We're actually based in the same town in Illinois as State Farm. We just spend about 1/1000th on marketing, as State Farm does. We don't pay Patrick Mahomes to get our name out there. Country kind of puts that on us to get out in the community and get our names out there. But it's an excellent company. They're focusing their dollars on making sure that if you ever need us, if you ever have a claim, if you're talking to a claims person, a customer service rep, or me, obviously, you're going to be taken care of. They're investing their money to make sure that obviously being a mutual company, we spend a bunch of money on marketing, that expense gets passed along to the clients, and that's not something we want to do. Just a fun fact, we actually had a meeting, kind of a State of the Union almost type of deal in Kansas City yesterday. It was a lot of fun. The insurance industry is absolutely nuts right now. There's not a profitable insurance company out there at the moment. I learned that our company is going to lose a lot of money this year, a very substantial amount of money, and that's okay. That was kind of the whole point of him even telling us that was, hey, it's kind of cool. It's obviously horrible, the state of the insurance industry. Your rates are going up. Whether you had a claim, a ticket, your auto insurance, if you had a claim on your home insurance, it doesn't matter. Your rates are going up. Claims are at an all-time high. I also found out yesterday that the company has been around 98 years now, and we just had 3 of our top 5 largest storm losses as far as claims dollar amounts in the last 4 months. So in the last 4 months, we've had 3 of the biggest instances in the company's history. So yeah, there's going to be a huge loss on the balance sheet at the end of this year, but Country has positioned themselves for that to be a complete non-issue. We're going to have some rate increases, but we're going to be several percentage points below the industry average. We're going to be a lot more even keeled than a lot of the companies out there. And we're taking care of our people at the same time. We're not pulling out of certain states. There's a lot of very large companies completely backing out of certain states, saying we don't want anything to do with that. Country's not doing that. We're not going to drop you if you have a claim. The only time we're going to drop somebody is if they're having a claim every 6 months. I mean, it's not a situation. I talk to people every day. Hey, I had a claim 2 years ago, and my insurance company decided they don't want me because I'm too high risk. Because I've had one claim in 30 years. So silly stuff like that, it's not going to happen at Country. That's a promise we got actually just yesterday in that meeting as well. We're just operating a lot differently. So great company to be with. And obviously, if I'm your agent, you're going to have my undivided attention anytime you need it. And we're going to take good care of you. So to wrap up, life insurance. So homeowners insurance obviously is a whole different beast. There's a little more to it than I even went over. Happy to sit one-on-one and go over all of this with you, especially once you're, in that great situation where you are purchasing your first home. Would love to kind of explain a little more of the ins and outs of it. But after everything's said and done, you've closed, you are moved in, you're settled. I'm not going to, be beating down your door the second day that you're living in that house, but it's a very, very smart idea to review life insurance with everything going on. The cost of living, the cost of everything is going up. Life insurance is as important as it ever has been, but when you go bite off that $400,000 mortgage we've been talking about, or even if you put that 20% down for a conventional loan, that $320,000 mortgage, your life insurance need has changed drastically. Even if you went from one mortgage to another, it's pretty rare that you're going down in debt, unfortunately. You need to have that debt covered. You don't want to pass that along to your family. There's a lot of different things that go into that. And buying a house, having a child, getting married, getting divorced, any kind of life change is a huge time to look at your life insurance. But buying a house is probably at the top of that list because, like I said, you're biting off a huge amount of debt normally. And even if it's a small amount of debt, there's not a lot of $30,000 houses out there. It's going to require a review, and we're happy to do that. And it's going to get you discounts on all of your other insurances as well. So
one thing that I have found is that a lot of times people will insure just the value of the house. So even if you don't want to have a full-blown life insurance policy, because that can be scary sometimes to
Sure.
people, just insuring the dollar value on the house so that way should something happen, your mortgage is taken care of.
right?
Yeah, that's a good point, because a lot of times when I talk to somebody, they're like, oh, I actually set up life insurance, 5 years ago, whatever the case may be, and I really like that guy, should I just go talk to him? And absolutely, I mean, I'm not gonna try to step on any toes or mess with any relationships, but I have been in that situation where they're like, oh yeah, you're right, we did just, take out a $500,000 mortgage, maybe we should review this, and I can help with just maybe that $500,000, you can leave the rest with that other agent if you'd like to. Obviously, you're welcome to do whatever makes the most sense to you. It's just very important that you get that $500,000 taken care of, just in case something happens before that mortgage is paid off. You don't want to be passing that along to your loved ones. So,
All right.
thank you guys for being here. Thank you again to Aaron, to Nikki, Terry. This has been fun.
Yeah, thank you. And for everybody out online, do let us know if you've got questions. Tag us below, put a note to us on Facebook. We have PDFs of everything that we presented today, so we can either meet with you one-on-one, we can send you the PDF, whatever it is that you would like to look at. So Terry's back, and Aaron,
Say goodbye.
hold on. I think he's camera shy, but I can change this here. So, but anyway, if you've got questions, that's what we're here for. So we wanted to kind of give everybody online an opportunity to know who we are, what we do. So that's what we're doing. But then we can always meet one-on-one in one of our offices. So until then, comment below and we will see you soon. Yay.